Welcome back to Facebook group live. We are the world's most dangerous Facebook group trio. We are here today talking about financial freedom. We're talking about passive investing. We are talking about building. You see, the problem is most of us as dentists, we have the ability to earn high incomes, right? We've achieved this high level of income, but then we also upgrade our lives. We get a nice house, right? And we get a nice dwelling. We get a nice car. We drive a very nice car. We go on nice vacations. We drink expensive lattes and frappuccinos, right? We always upgrade in pretty much everything. And so we get accustomed to this nice lifestyle that we've had, maybe private school for our children. And we get accustomed to this great lifestyle. And then boom, all of a sudden you turn around and we are subject to we have the proverbial golden handcuffs. This happens to dentists more commonly than any other demographic, is getting trapped by golden handcuffs. What is golden handcuffs? Golden handcuffs are not physical chains, but we're the chains to our livelihood, are not our livelihoods, to the whims and mercies of our spending habits. And in order to maintain that lifestyle, we have to continue to earn a high amount of income. And if we're depending on this high income to maintain this lifestyle, all of a sudden we feel trapped. Oh man, how do I turn this around? How can I maintain this lifestyle? But at the same time, I want to work less. So that's what we're going to talk about today. And more specifically, we're going to talk about pitfalls of investing and how to avoid them. My name is Dr. Jonny Walker, and I'm here with co-host 10X Tom, Mr. Tom Varghese. We're expecting Dr. Noel Liu, to join us. I'm assuming he's going to be with us shortly. And I think we're excited. I'm excited about today's topic, Tom. I mean, talk to me, man. I mean, what do you think in terms of investments and mistakes that people make? I mean, should we get into that?
Yeah, that's a great it's a great topic that I have a lot to share about. By the way, my name is Tom Bibi Varghese. I'm a serial entrepreneur. I started real estate a couple of years ago, about 2.5 years ago. Brought which is actually going to be my first property. Was I would consider that as a mistake today. I I started investing when my CPA said, "Hey, you got to buy some real estate so you can offset some of your taxes," and he said you have to buy multifamily, and he said, go buy like two-year single, double, I mean duplex, triplex, and anything. Anyway, what came in on the market at that time was a 6-unit property, right? So I went ahead and put cash down and purchased that property. And today I would consider that a mistake. I mean, it's not that money is not coming in every month, but it's too small, takes too much time, too little cash flow, needs all your attention, all that stuff. And I'm not even managing this. We have a handyman on site over there. We have sort of like a semi property management per situation, and still it requires a lot of time. Tenant dealing with tenant issues and all that stuff. And I decided, man, this is too much work. This is not for me. I got to go big. So the first mistake is thinking small and buying small, right? You got to think for the long term. You got to scale up. You don't want to settle with just one property. You want to keep adding to your portfolio and make it sort of like business, just like you run your practice, like your business. You want to make this into a business where uh, it requires minimal input from you. In other words, you want to make it into a passive investment. That's why we talk about passive investment here, because that's the opportunity that we have as this group, is to take part in some of these passive investments. You don't have to worry about the toilets breaking, tenants calling you at night. All that stuff is taken care of by the management team or the GPs, and the limited partners get that cash flow. So One of the mistakes would be buying too small. I wouldn't do that today.
Number one, I think that's scale. I think that's
Yeah.
absolutely. I think that's and that's a great example you even gave. I mean, the actively managed stuff. I hear a lot of dentists. I talk to a lot of investors, and that's one of the common things is like, I want to get started investing, and dentists a lot of some of the people that I talk to in these groups, they have they're great intentions. It's like, listen, I want to get involved in real estate, and I applaud them for taking the initiative to go out and invest and then go out into this endeavor that's completely different from our profession as dentists. And the problem that I see is that a lot of people, they want to buy, short-term rentals or duplexes, threeplex, fourplex, these type of investments. And not to say that these type of investments are bad per se, but they're the type of investments that also require attention, right? They require attention to detail. When I say that, I mean management. They require active management. So now that process in itself, we're not probably managing it as well as a full-time real estate professional is if we're an evening and weekend investor, right? Like Tom, you have a company or your business and your job that you're working at. And when you're working on your sixplex, it's when you have time on evenings and weekends, right? So an evenings and weekends investor already has a distinct disadvantage from somebody that does it full time. That's number one. Number two, this is not a scalable type of thing. If we are doctors and we make a big income and we have the money to put down and buy, say, a fiveplex, sixplex units, right? So we have 6 units. It's near me. I'm very organized. I have a spreadsheet, right? I can manage rentals. Okay, I can manage it. Boom. All right, so now you want to go and add another property though. All right, so we need to add another one. 12 units, 18 units. And then the management all of a sudden becomes onerous. I mean, this is not something that we can, how about if you want to take it to 100 units? Is this something that you can do as an evening and weekend investor and still do it at a high level? And that's what the biggest problem is with us as doctors is that most of us, I think we should all invest in real estate. A lot of us don't invest in real estate, but the ones that do invest in real estate, they often get stuck with a second job where they're not investing it and handling the investment as good as it could be done. Or even worse, I hear guys say, hey, I live in LA, but the cap rate in Memphis, Tennessee is 9%. Why wouldn't I invest there instead? And then they buy something out of state as their first investment. And then all of a sudden they are like, well, I'm just going to get somebody to manage it. Well, guess what? Somebody has to manage the manager. Nobody tells you that, right? It's not this magic trick that, oh, well, I'm just going to pay this guy. Guess what? If you have a manager in Memphis and you live in Los Angeles, what do you think is going to happen, Tom? Do you think that manager is going to work and function at 100% capacity with 100% best intentions and get work in your behalf if they know you're not watching them? I mean, what's your experience, Tom? I know I can tell you the answer to that. It's a very short answer.
Yeah,
The nature of people is
you're talking about
yeah.
managing the manager kind of thing, right? Is that what you're talking about? Or
yeah, you have a property manager, you can't just say, all right, well, the property manager is going to, and I don't have to ever even look at the property again. I don't even have to talk to the manager because they're going to go handle it. I mean,
yeah,
it's a recipe for disaster.
that never forget about that. There's Mr. Noel Liu. Finally, he got on.
What's up, man?
Everyone? Dr. Noel Liu. What's up, man? What's up, man?
Guys, I was tech challenge.
Were you doing an implant or something right now?
Just tech challenge. I was trying to log in, but it kept logging me off. So I'm here now. Finally, thanks a lot. Thanks, and yeah, you guys started. That's awesome. So I
man.
cut you guys a little bit. Let's keep it.
Let's keep it rolling.
We're talking about 3 mistakes. 3 mistakes when people try to
mistakes,
3 things that I wish I knew before I started investing.
Awesome.
So
topic,
one of the things that we covered covered was, thinking too small, buying small. People think I can go
Yeah.
buy it myself, and then that was one of the mistakes that we covered. Noah, what do you think are some of the mistakes that you can think about?
That's great. I just had a call this weekend looking at multifamily, but she wanted to do something like a duplex or a quadplex, which is great. And just one thing I just want to clarify. Yeah, we can definitely do it alone. We can do it with like, our, if we want to scale and we want to start like, having people pitch in with their master, we need to start teaming up with people. And that's one of the mistakes like a lot of people make when they are like actually go small and making sure like, what fits in the budget, right? Or wrong. We're trying to like see a deal, and then we see like, oh, how much we have in a bank account, and then probably get this deal for this amount of money down as equity, and that's how we like to roll the whole time. But little did we know, like, we can actually collaborate and we can get bigger deals there, Tom.
Yeah, absolutely. Yeah. So the other mistake I was thinking about, like you said about the team, right? So I mean, even we know some people who thought they can do it themselves. You always want to do it with a team. Is there something
Mm-hmm.
I really realized? Not doing it with the team is another mistake. I mean, do it with the right team. And Noel, remember we even spoke about somebody who went out single-handedly, and they're having trouble closing the
Yeah,
deal and stuff like
yeah.
that. So because they wanted, I mean, you can do it yourself, like big properties at a later stage. I mean, you got to be so big to go and raise money and do it yourself, or you got to team up and have a team who will take care of the aspects. They will come up with the money. We have equity partners, and there's going to be a management team, asset management, all this stuff. So finding the right team, I mean, not finding the right team is the mistake. So you got to find the right team.
More importantly, guys, what I think is figure out, do they want to do active or do they want to be passive? Right? Active, and you want to do active, then are you like doing it with a group of people? Are you doing it separately, or going to be doing passive, like solely completely passive, like how Jonny was just saying about being a passive? So I think those are the two areas where people need to decide how they want to go.
Most
I
in
mean,
most in this group, I think they're looking at investing passively. So maybe we should touch on that too. Like, a lot of people are interested in, they don't want to get the calls at night saying my toilet's broken, my shower isn't working, and stuff like that. So they're looking to invest. I mean, majority of them. So
Tom, I think you would think that they want to do a lot of the interest that was coming in from the group was they want a 10 unit or 8plex or maybe like a quadplex, and that's where a lot of times we need to start a day job, or do we get a second job? And I think we need to start figuring out like a biggest ROI. Is it our business, our dental practice, or is it like trying to manage like a plex? So that is something like we can start. Jonny, what do you got to say about this?
About what? About the
passive
mistakes.
versus active.
Yeah.
Yeah, I mean, where I came from with that, man. I started as an active investor. I was a heavy active investor. I had a multi-million-dollar portfolio by 2017, which included many different types of real estate. I had a strip mall, which I still have. It's hopefully closing. We're selling it. Hopefully close after 11 years now. I've had it. Parking lot, strip mall. I've had industrial land, warehouse, mixed use buildings, apartments. And I got to a point that I'm like, this is the way to do it. You just got to keep buying one investment property after another, build a small cash flow from different properties.
Mm-hmm.
But that works in theory. But when you're actually doing it and you have 10 properties and I'm a full-time endodontist and entered children at this point in my life. And all of a sudden I'm up to here with how much I can do and handle at one time. You know, I'm failing at everything then. You know, I'm doing everything half-ass. I'm not seeing and what happened was I didn't see my children on weekdays, right? By the time I was up and out of the house, by the time before they were awake, and I was, by the time I got home at night, they were already in bed, right? So that was when, you know, active investing is great if you're doing that at full time. If that's your profession and that's what you love to do and that's your livelihood, then yes, you should do that. But if you prefer to have a sane life and a life worth living and have time to do things, the active investing, unless you have a passion and that's what you love to do, or are you looking for the benefit, getting all the benefits of real estate investing without doing the work? That's what I want. That's when that light bulb for me, Noel. And that's what I was like, listen, passive investing is really the way to get all of the things that I'm trying to achieve, which is cash flow, build wealth, without doing the management headaches, without ever dealing with a tenant, without fixing a toilet. So that's what I went all in.
Oh, great.
Investing. And that's a complete different. You have low liability. All those properties I personally, I had millions of dollars of liabilities that I was personally. I'm sorry.
No, I mean, did you personally guarantee those loans?
When if you get into small properties where you get $1 million mortgage or $1.5 million, in almost always ask recourse loans. I mean, you get more favorable terms also if they recourse, but yes. So I did have personal guarantees on several of them, you know, so I had a couple $1 million at least that I can think of. There was obviously some that were non-recourse, but there were some that were, you know, recourse loans. It's all the residential stuff were recourse loans for sure. You know, all the stuff, I started with residential before I started investing in commercial, and those are all, you know, those are all personal liability. Now with passive investing, there's no recourse loans. You don't have any liability for, you get sued. People cannot come after you personally, after your assets, you know, and that's another B of passive investing. You get all the advantages and you don't have the liabilities, right? You don't have to do the work. I mean, what's a better way to invest? Can you tell me a better way to invest? I mean,
you know, there's a small niche there where someone is looking to get a small deal. The best way to do it is get a quadplex. Actually, you know what? Let's put it a quadplex, because anytime you go over a 5, then that's a commercial property. 4, live in one of them, right? Live in one of them and then rent the other building into an LLC, treat it like a business. So you're not using pre-tax dollars to write it off. And I think that's a very, very smart way of doing it if that is one of the niches too. And that is
that's a huge hack. That's what that's a huge hack, Noel. That's a huge hack. I always recommend people to do that. If you can get into if you're gonna go buy your own house, I'm like, go buy a 4-plex. Go buy a 6-plex and live in one of the units. That's the best thing you can do to start building wealth. You know, then you can live rent free, number one, right? Because other people are going to be paying. You have enough income that you don't have to pay it. And your biggest expense after taxes is your living. And you can wipe that out right away. You know, I mean, what a great way to start building wealth. That's a great point.
I mean, Jonny, if you think about it, like we go buy a house, right? We have our post-tax dollars after paying everybody. And now we have a house. It's not an asset, it's a liability. Now we're trying to pay for everything, which is like after taxes. Now, if you do it this way, this is like the best of both worlds, right?
Yep, exactly. Exactly. Yeah,
100%.
I agree. No, I mean, I would, if I would have.
So for someone,
I mean, I lived in I lived in apartment buildings.
Sorry, go for it.
No. Yeah, I mean, no, I was just saying, I used to live in an apartment building, and you know, when I lived in the city, you know, in Manhattan, and then I couldn't afford anything, but if I had the opportunity now, like, I mean, listen, I would be like, go buy a 6 unit or 8 unit and go live in it for a few years. And you know how much, wealth you especially if you're a dentist and you do that and you have the huge dental income, and now you're saving tons of money because your living expenses are so low. And now you got a big head start on being able to invest more faster, right? Which is the way increase the exponential returns from real estate, right? So if you can get in more sooner, faster, you get that, and you start building wealth right from the beginning by being in a 6-plex or an 8-plex. I mean, if you're in your house, now you have to pay out of your own pocket. You have to pay out of your own pocket. And the bigger the house that you get, the more that it eats away of your disposable income. That leaves less money for you to be able to invest. No, I think that must, like, if you can have the ability to do that, when you sting, go live in your apartment building that you own. I mean, I love that.
So guys, just explain, just dive a couple of more minutes into this here, right? I got sent my way this weekend. How would somebody go find a deal like that? How would look for?
Say it again.
Where would they find a deal like that? Where would they look for?
Oh, I mean, Noel.
You mean
Noel,
like
you probably
you mean like 4-plex and 8-plex, duplex kind of thing?
Yeah. If I'm a beginner, I'm looking at this. I'm like, hey, you know what? I really love what Jonny just said. How do I go look for? Do I look for broker? Do I look for commercial? Do I look for a realtor? Or do I look for, do I look at an MLS? Do I look at
so
Brexit?
if it's a 4-plex, 3-plex, duplex, even 6-plex, usually it's your realtor that you got to approach. Usually when it comes to commercial, realtors have no clue, but when it's like 6 and less, or even 5 and less, you can talk to some realtors who will get you some of these deals, and these also end up in MLS, actually, some of these.
Nice.
But Tom, even a lot of these type of deals are individual sellers. They're smaller guys or smaller developers. I mean, a lot of them, you can find them even on stuff like Craigslist. People are still listing stuff there on those small type of multifamily.
They don't want to pay the broker fees. Yeah, you're right.
Exactly. I've had a lot of success in a lot of different things on Craigslist, to be honest. And it's very cheap to run the ads, $30-$40, and the amount of eyeballs that get on it are pretty. And for especially smaller investors, there's a lot, I feel like, on Craigslist. So that's just one, but obviously there's a whole bunch of different websites. But none of us are really in the market for that stuff, so we don't really know too much about that either, right? None of us are investing in that kind of thing anymore. But it's definitely a good hack for a beginner.
Awesome.
I don't know. Are you, Tom? I don't know. Tom, you had a good experience. You already had one experience with
so I found it through
that again, right?
Oh, I will never do that again. That's too much work, too little money, sleepless nights.
I mean, go into that a little bit, Tom. So, you have a real life experience with that. I mean, if you share a little bit about that, why would you never do it again? I mean, you're pretty. Listen,
so
I would never do that again.
Right.
I mean,
First of all,
I think that's invaluable. To that deeper. Why?
Yeah. So let's talk about that, right? So first of all, I got into this property not knowing anything. And but I always believe in learn on the job and stuff. So I mean, you can get advice on anything, you can find out about anything. So anyway, I bought this not knowing about anything. All you do is, first month was great, the checks kept coming in. Then there was a problem tenant, and she wouldn't pay rent. Okay. And it was during the pandemic time, and she stayed in the building for 12 months without paying rent. I mean, I understand everything. If she was reasonable, I mean, I'd be okay with it, but she talks to us like she is the owner and we are the tenant. So, and it's so hard to deal with her, man. I mean, it's that alone would would be want to deal with this anymore. That alone is enough for you to give this up and get the heck out of that. Then the second thing I realized is that um, so when people started, like when a couple of tenants they left and we had to get in new people. So the previous owner, um, they had given us all the deposits and all that, and some of the deposits were like really weird, $200, $300. um Usually it's a month rent, right? So when they were about to leave, they're like, hey, we want the deposit back. And we's like, okay, here's your $200. And they're like, no, we paid to $100, it's not 200. So the previous seller actually screwed me over on that too. um and then it's costly to go after lawsuits, so you basically eat that.
Not even worth it.
Yeah, so
Yeah,
I mean these
litigation.
are all these are, these dealing with tenants, and then that tenant didn't pay me, right? So there's 6 tenants and there's one vacancy now because that tenant is not paying me. So that's like, when you do the math, it's like what, 70%, something like that.
17, yeah,
Yeah,
17%.
yeah, 17%. So in a big building, in a 50 unit, yeah, one or two people don't pay, who cares? You still at 98% occupancy, right? So those are the reasons, man. You need to go big, you need to think big. There's enough money that's going to come in, so you can handle all these nightmares. At the end of the day, you need to have cash flow. That's why you got into this game.
Yep, cash flow. And those, I feel like those type of properties, I mean, you have one, if you have even one unit that's not occupied, I mean, like you said, you're only 83% occupied.
Yeah.
Break even might be somewhere 75. Okay, so you're slightly above. Now, if you have 2 vacancies, all of a sudden you're putting money out of your own pocket now.
Right.
Right? You have cash flow and you're on the hook for it, right? Because so whereas if you got a 100-unit building, you have 5 tenants leave. Oh, well, guess what? I'm still 95% occupied.
Exactly.
If you have 10 tenants leave, I'm still 90% occupied.
90%. Mm-hmm.
Well, I got 15 tenants leave, 85% occupied. I'm still cash flowing. I had 20 families leave this month. I'm still 80% occupied and I'm still cash flowing. If you go below 75% occupied, then that just means that it's a very poorly you're very poor operations, or something drastic happened that's just driving tenants away. Something happened. But I mean, some extreme like that, unless something extreme like that happens, it's very difficult to go into positions where you're losing money. And that's why, these economies of scale. That's what you're lacking with those small properties, like you mentioned, Tom. You can't pay somebody full time to manage 6 units. You can't even pay. And finding somebody part time to do maintenance that's reliable and will show up is very difficult. These people are looking for full time work, and they're not waiting around to do part time work. So if you have one 6-unit building and you're trying to find somebody that can manage it for you, good luck.
And if you another thing with that, like that you brought up something there. There's a lot of people who will manage it for you for like 7% or like 6%, but those guys are just worthless. I mean, because all they're doing is collecting the rent. You can do that yourself. And if something goes wrong, they call you and say, hey man, the toilet's not working, what should I do? Then I'm going to be like, send a handyman. He's going to send the most expensive handyman who can fix this stuff, and he gets
He's just going to send somebody to get it done. He doesn't care, because you know why? He's not incentivized to keep expenses low.
He's not making enough money.
Percentage of gross rent.
Yep.
Doesn't matter if the expenses are high, right? So they just need to get a person to do the job. First body that can come and do it. I don't care what it costs. My friend Tom, the rich landlord, will cover it. Right? So I agree with that. I mean, take a 200-unit apartment building though, right? Like now all of a sudden, you hire full-time maintenance guy with benefits and everything, and hire him an assistant. And he can manage the entire building. You might even give him a unit at reduced rent to live there. So now he has incentivized to live there. He's getting cheap rent. He's getting paid well. And you have a maintenance guy now. This is where the economies of scale come in, right? If you have a 200 unit apartment building, or you have 200 single family houses to manage, you won't have one maintenance guy. You're going to have a guy that's in this part of the city, another guy in that part of the city. You have 8 or 9 different maintenance guys trying to manage 200 properties, and it'll be a logistic nightmare for you to even keep track of. Contrast that to 200 unit on a roof.
Yep.
We have one guy, that maintenance guy can manage it. It's all with one app. You know, this is where the operations of expenses come way down because of the economies of scale. Multifamily real estate is a very scalable business. And so when you have the larger number of units under one operations, you get to share the revenue of a whole bunch of units, but the expenses don't increase proportionately, right? They increase. There's a lot of the expenses are fixed expenses, right? Some are variable costs, but a lot of the fixed expenses, they get diluted by these huge revenues. And so that's why these large apartment units are way more favorable. You get professional management, so we don't have to do it, right? Somebody else professionally will do it. It's not ripping you off and is not useless, like you said, Tom, right? Like with the small guy that is just kind of, hey, I'm going to, like Tom, even if you're paying a guy for 6 units and you're paying him 7%, and say you're getting $1,000 a unit for, 7,000. I mean, what's 7% of 7,000? It's not a whole lot of money.
It's like $500.
Or, you're going to pay somebody $500. What $500 a month? Nobody can live off of that. So you're not going to be their priority, right? Their job is going to be their priority.
Absolutely not. Yeah.
Yeah. So anyway, I digress, man. I think I answered that point, though. I mean, I think that was, economies of scale.
Before we land the plane,
and the time and money expenses. What's that?
Yeah, just to close that deal, same amount of work.
Same amount of work to close a 6 unit and a 100 unit. You're right.
I mean, maybe a little bit more, but not proportionate to the size of the deal. Not even close. Yeah. Absolutely, man. I agree. All right, man. I mean, listen, I think we covered a lot today, man. I mean,
I think, yeah.
Any,
by the way, before we close, we got to talk about your group.
Yeah.
I put a link up already. Me and Tom, we spoke about it last week. So we are going to try to keep even creating more value here, right? So we've created another group. It's going to be a little bit different format. Talking about financial freedom.
It's more about financial freedom and how
financial freedom, passive investing. All of this. Little twist, the different. But it's going to be an excellent adjunct. It's to this group. We're going to continue to keep doing live here. We're going to keep contributing and growing this group and growing this community. And we're going to also be growing this new community as well. And our guys, you don't have to worry. Tom and Noel will be there as well, adding value. And so it's something I think that everyone's going to benefit from collectively. So I'm looking forward to is there, guys. I take a look, join, and
go and click that link in the comments, join that group, and we can have the same amount of fun we have here over there too.
Yes sir. But man, it was great to be here again on live February 28th. We're going to be back again next week.
Any closing remarks?
Noel?
No, my mic is going in and out, so
yeah.
I'll just
Noel. You can see Noel is busy here. He just finished seeing patients. You can see the charts in the back there. He's got to write up all his charts. So he's got a lot of work to do here. But
making a lot of money.
Getting the money, man. Serving the patients. Excellent. Love it. So we'll be back again next week. That's March. What is that?
6th.
7th. 6th?
Oh, 7th. Sorry.
7th. March 7th, I believe. March 7th, Tuesday, 7 p.m. Eastern, 6 p.m. Central. Until next time, guys, keep growing that wealth, keep growing the freedom.
Sounds good. See you, everybody.
All right,
Have a
guys.
good night.